Good morning. This is the crypto day morning. Today's date, Friday, the 9th of November 2018. My name is Derek. All bets, trades of the like within one's own risk and their own reward. And when starting off within Bitcoin, looking at a lot of days going back a little before 2015 on the Bitcoin price, basically from the lows forward. What are the things that we can see? Well, as far as low volatility is concerned, there was a little bit here. Definitely a little bit in here. This entire uprun had a lot of very interesting low movements, and there was this little bit in here, but that was a little normal. However, what we're seeing now is quite low as far as volatility is concerned. So scrolling through, and now I can see red and green candles a little bit more, but it's just in this straight line. And interestingly enough, when we calculate mathematical Fibonacci, which is high divided by low, 20,000 high and 150 low, a little more than 100x. We calculate such, we get 150 low and a 20,000 high. If we put it to the root of 0.764, which represents a 23.6% down retracement, that number comes in at 6,303. And then, of course, the 61.8 representing a 38.2% retracement is in at 3,000. I've talked about that ad nausea this year. And then the 38.2 or 61.8% retracement at the 1,000-ish handle, which is a key level from, not shown on here, the resistance in like 2014, and then of course a little small decent area in 2016-17 as well. So 6,300, it's just hanging in there at that big number. So Fibonacci right now, 4,6,300 is a monstrous hit right now, supporting the matching lows, which basically is coming in at around 5,800. As we can see, this low here had a number in at, let's just find the number. It's under 6,000. Just 5,920. And then here we have a hit of 5,850. This low in here comes in at 5,880. So the general area for this 6,000 number, because this found support at the low of around 6,500, finding support within this area constantly. And the lower highs have been just that, lower every single one. And we'll talk about a lower high whenever it goes up above this 18 average, and then a low when it has a decent move below it. Now, generally speaking, if it barely pierces above it, I can't count it, but a day like this, it had a decent break above the 18 average of highs when on a situation of volatility of like 3%, if it breaks the 18 average of highs by more than that, like 3.5%, then that does count. But you can see it's still lower than this general area. And it could have another lower high from here. Price action has gotten above the 18 average, has now come back to the 18 average of lows. This is a big support test, because if it does happen to hold here via a higher low to the break lows on Halloween, then getting above here, maybe we can start again finally about maybe talking about breaking the higher highs. Keyword on that is maybe, and it's still got to do such. But in keeping this pattern afloat, I mean, it could mathematically fall maybe to 58 and change, thus matching lows remain, and then maybe rally up to about 62.50, and then that would be the next higher or lower high. So there's still more lower high room available, but the volatility, again, being as microscopic as it is, I'm expecting it to remain such for a while. But it's, as I've mentioned, either the break of 5,800 going down or breaking out, at least getting above close to 7,000, then that would have decent moves in either of the directions. Until then, it's range bound in that market, of course, the lower highs and the matching lows. Yesterday, I was talking about a coin which was profiting even though it was down quite large, using a simple strategy. And that is to, in this case, buy to the base when it's down 5% or more. And you can do the variables you wish to choose yourself. The more advanced you go, the more advanced profits you have available to you. Sell to the base when it's up 7% or more, meaning if you buy something at 1,000 Satoshi, if it goes down to 950 or lower, then you'll buy. And if it goes up to 1,070 or higher, then you do that of sell. And if you started with, like I was showing yesterday, with 1 Bitcoin or 0.1, whichever you choose, 0.02, it doesn't matter, then you buy or sell it to get it to that level. Of course, if you're playing with smaller stakes, with minimum bets in some places like 100,000 Satoshi, you're going to need to have higher percentage moves than this if it's really low. But this basic strategy does work very well. Let's take a look at a few examples that I came up with yesterday. And we'll start with Lumen. This is a market that if you were to just to buy and sell hold from this point, you'd be up about 7.2 times. But in this case, you're up about over 12 times, and only down, and the market's only down 30% from its high. So that's actually for Lumen. There's not many markets that can say they're only down 30% against Bitcoin from their all-time high. And this chart is just making a very beautiful pattern of higher highs and higher lows within this. When we take a look at Lumen against Bitcoin, this is what we see. And amongst the first 2017 rally, this going way up here, way down there, basically this coming back to its level of resistance and then creating what has now been a big symmetrical triangle from the January highs. Whereas again with this, in its most recent time, it's going mainly sideways within such, but it's staying at the upper end of this point right now, thus near where its all-time highs were. These numbers, that's how many days it's been. So there's a 1,500 plus day history within Lumen and Bitcoin. Let's take a look at the next one. And this is ZCL, a market that is down 92% from where it opened and 96.5% from its January highs, which would be right in here. So then, let's take a look at ZCL on its market. And as we can see, it just going down quite precipitously, I guess might be one way of pointing it. But within this strategy, if it has down moves, but all of these up and down choppy moves like this, that's only going to be magnificent for you. And when you think about some of the mathematical reasons to why the charts look as they do, for when the market was up here, holding and buying is really, I mean, if you could sell everything at the top, and good luck figuring those numbers out, then you'd be doing well. And of course, one could say it was easy here because you could sold anywhere in the sideways. And 122, that counts enough for a top, and it does. But when you look at how many coins you would own down here compared to up here, you're talking about owning like 95, 97, 98% less coins from the low to the high point, because it's always going to be worth 1 Bitcoin for you in this spot. And that's using this example for the charts. And therefore, whatever 1 Bitcoin is worth down here is what you own, whatever 1 Bitcoin is worth up here. So when the coins take a big fall, you could be talking about having like 50,000 coins falling, compared to this, another person might have like 590 coins and they're falling. So buying it back, that's why all the charts are going to generally have this look of every single time it has a big up move, it's going to protect its profits by having these types of higher lows on extreme pullbacks. Next coin, which is in that of Ripple. And when I get the data, I'm not getting the data from the start. There's a couple coins that is evident with this. Ripple. And I like this from this view because now you can see risk versus reward. And how sometimes you really, really have to hold on to get the gains. For if you would have started it at this time frame, which was at a high, then the market was only going down and down. You would have been seeing your portfolio being worth negative 2 Bitcoins less from where you started. So you'd be down 2 Bitcoins. You would have had to put in 3 Bitcoins to make these buys. And then the gain comes in, and we can see on its big pullback, it protects it by going from here to here and a major higher low, decent rise again, and then this comes back to where it came from here. Oh, the Ripple chart against Bitcoin didn't. And now it's going up and is in the upper end of its all-time price area. For the actual, from where this is, the price is close to the same from the start. And it's down 65%, the actual market itself. So it's lost about 3x from its highs. This is a spot and going from 4.8 now at like 4.2, which isn't down much. But this is linear. And what do I mean by linear? It's always worth 1 Bitcoin. So going from, in this case, 4 to 8 is the same as going 8 to 12. Again, because you're always wanting to make sure that the value of the coins is always worth 1 Bitcoin. And long term, you're just going to get these type of movements. That's why I call this like a slot machine type of strategy. The only difference is at a casino, I'm not the player, I'm the slot machine itself. That is going to have to pay big jackpots sometimes. And this is an example of what it would be like here. But this thing just pays off in the long run. It's just going to keep paying. And that's how I look at it as. And in looking at the chart, it did not participate in this rally. So the data that I got, cryptocompared.com is where I downloaded it from, would have been somewhere at this current price level here, because this down move would have represented the original down move as well. But as we can see, point high comes back down to where it came from, and then a matching high. Where here, it came down to a significant higher low, far away from where it came from, and then a higher high. This level here, of course, matches here. And I can't say the same about this low, as, of course, again, we're seeing the situation of protecting profits within this strategy. This is an example next within Cloak, which is underperforming that of holding, albeit minorly. Where the base, if you were just buy it at this point, you'd be up 18.8 times above where you started. And here, I'd be 16 times above. And the actual market of Cloak is down 12 times from its most recent highs. And it started down at this low. That's where I got the data from. Sometime in late 2014, started 2015. It was 2,800-ish or so. Or 26, somewhere around there. I got the exact number later. But within its situation, it's had all of these up and down choppy movements, which has just made this a very high profiting trade. But when you look at the mathematics to how well you'd be doing in certain situations, if you were to buy everything here and sell everything up here, you would have destroyed the strategy because it would have been worth a lot. But everything that it lost from here down is over 10 times. And then, of course, from this high, the number that I gave was a little less, but still the big moves. Now, if you knew the highs and lows, okay, I'm going to buy down here, sell up here, buy down here, sell up here, buy down here, sell up here, buy down here, sell, buy, sell, buy, sell, buy down here, sell up here, buy down here, sell here, buy here, sell here, and it looks like we're buying down here. That's the thing. It looks like tops and bottoms known after the fact, and to say you know exactly where the continuation short-term market's going to go, well, sometimes you can get odds in your favor, but that's really, I think, is the best you're ever going to do. That doesn't depend on news. That's always based on the fundamental aspect of things, of course, as well. But yeah, this is cloaked, nice up and down choppy action chart. And simply by playing it within this strategy, as we can see, is just nothing but continuously make nice highs. This is the type of chart a gambler's chart should look like. You're going to have moments where you're going to have losses. You're going to have moments where you're going to just break even through many, many days. The bad beats. But this, if you're playing poker, if you're betting on sports, and heck, if you're trading within the market, this is really the type of direction your overall portfolio should be working towards. Yes, you're going to have bad times like we see here, but the bad times are always going to work out when the better times come in. Again, that's the prototype or the mathematics on how this strategy works. And the final one I'm going to do is extra bytes or XBY. I don't have the actual chart available that easy, but I can explain the numbers. It's up about 8 times from the start of when I was doing this, around 70 Satoshi. And then this was a move that got up to 1500. And then this pulled back to like here, like 250. And then the market would go up to like 500, which was close to previous highs, or 600 or whatever. Then it would pull back and make a lower low against Bitcoin. It was like under 200 here against Satoshi in price. But it was higher than this, which here, this in the actual chart was noticeably lower here, just like this is noticeably higher of a low. And then the move higher was going from about 180 well into the 5,000s or so. And now it is priced at about 500. And 500 would have been somewhere up in here, where between the 4s and the 5s at different points. And 500 was even, this would have been the 4 hit, right around number, a day number like 20 or so. That would have been where 500 was again. This would have been 500 pulling back to 250. So then, these are some charts. Again, it's all from the base strategy of buying when it goes down, selling when it goes up. And the way I like to do such is, again, if you're using a situation where you have a market that goes from 1,000 to say 1,100, a 10% up move, then if you're doing a Bitcoin, you would be worth 1.1 Bitcoin on the altcoin. So you would sell 0.1 Bitcoin worth of it on the market to bring it down to 1. And then if it goes down, say it goes down 11%, then you would see it's worth 0.89. So you'd buy 0.11 worth at that stage. And you're gonna, this is an interesting strategy when you wait a decent amount of time, a day, maybe even 2 days, to see where the market's at to make a trade, because the having orders in ready to go and being more fancy means you can overperform all of these numbers that I've shown, which is even magnificent that it can be done that way. And when you counter that with stuff like orders, there can be a day where, say, the market opens at 1,000, has a high of 1,700 but closes at 1,350, or that's when you would reach the computer. So now you can sell at 1,350, but you missed out on all those sales before. So that's where you could say using the order strategy can work out. But that can work for both sides. It could be an advantage to not have orders in, because assuming a market has one of those days where you look, oh, it's up 115% for the day, and there's a lot of coins that do that. It was 1,000 Satoshi coin, and now it's like 2,200. You log in, it's like, holy crap, it's amazing. So instead of selling at like 1,100 and 1,250 and 1,350, 1,500, 1,800 and 2,200 like you did all day, you have a much single sell at 2,200. selling what would be more than half your portfolio at that point, using, of course, this strategy. There's so many different ways you get advanced play with the numbers, which I highly recommend you doing. If you can understand the numbers, then try to work with them to get the best results optimally for yourself that you can. And before we go, let's just take a look at Ripple against Binance Coin. Start off with the weekly chart. There's not much on here, but we got the 18 average on here. You can see it got above it, came back down, and then broke above. Now look at the example here is what I'm saying. If you just logged in every week, this is exactly what I'm talking about. So you're done logging in on the week ending September 10th, where this closed at the 28.22 handle. And then the next day or the next week you see it's at 55.51. You know what? I have to think it's still better to either log in every day or be active as much as you can. But I like the setup this has. You can see after coming back to the 18 average of highs, the red candle down, it gets followed with the green candle to the highs, and then two pause candles after that, just then within the 18, now breaking higher. What does this mean on the daily term? Well, it's a very beautiful, interesting pattern, and I have never seen low volatility like this before. This is crazy. And I really didn't want it to come back to where it came from. Like the 18 average of highs or even a higher 18 lows is what I was hoping for. Maybe this would be the case for such. But I do like seeing how the two green candles up, just changing this extreme microscopic volatility to good movement. And then two decent red candle size down. And now is this going to break above it? Well, now you got the situation of you've established this low area of 47. You've established this high area of 57. You really want to hold this if you can. Thus the 18 lows as well. So what's the next significant move going to be? And I like to do this with markets which have about the same percentile move on either direction for like a 2x, 1.4x kind of deal. But if it does come down here, then maybe it finds support. But if it's failing anything like this, anytime you see a market try to do something and fail utterly at doing something, then failed move, fast move comes into case. And that would be the situation if it is unable to make this high, comes back down here and shows weakness, that we'd probably be looking to at least test this previous low in at the 40 number, if not fill in maybe some of these previous highs between 37 down to 34 as a situation on that spot. But if it gets above here, you see price action at 59.2. I'm not surprised if in the next couple of periods after, days in this case, 2-3 days after, if we're talking at least coming back to this previous high, maybe even taking that out either then or days or weeks later after that, possibly as well. So thank you for tuning in and have yourself a great day. Bye-bye.